Good afternoon, ladies and gentlemen. We have a panel made up of very successful CEOs of financial institutions and banks. And they will be sharing with us their success stories. So they'll be talking about the secrets of their success, the investment opportunities that exist within their companies, and also outline how investors can participate specifically in their company's growth. My name is Essien, and I work for the Ecobank Group. I need to make one correction. I don't work for Ecobank Nigeria. We have a Nigerian subsidiary, that's right, but I work for the Ecobank Transnational Incorporated, the parent company of Ecobank Nigeria. Of course, Nigeria is a big part of the group, and it's one of the biggest in the group. So I guess we all have things that make us successful as an institution. And for a finance services company, some of the attributes could be your people. You want to be an employer of choice. Some of the attributes could be the process, that is process and systems that actually forms the foundation of that particular institution. Now, some of the issues will be the products and services, passion, perseverance, and the rest. Now, this is what has actually been the cornerstone of Ecobank. And without much ado, I would want to introduce my panel of CEOs, starting from my immediate left, Mr. Bob Diamond. I don't think any of them needs an introduction. Mr. Bob Diamond is with Atlas Mara, making a lot of waves throughout Africa. We have Simon Donu. Simon Donu is with the Ghana Commercial Bank. I think he wants to tout himself that is the biggest bank, although I think there is a bank that starts with E. Okay? Yes, I think he just rebranded and is GCB Bank, not Ghana Commercial Bank again. Thanks for the correction. And like I said, they want to tout themselves as the biggest. We will hear their success story. Then we have Carl Bank, Frank Edu from Carl Bank, also from Ghana. We'll tell you more about what they've been doing there. Then we have Mr. Rafiq Bengali from UBA. He's the GM UBA based in New York here. So he'll also be talking about UBA. They tend to call themselves Africa's Global Bank. Then finally, okay, I thought that we were having okay here. He's not here. So I will start straight away with Mr. Bob Diamond to actually share his thoughts with us on the secrets that have made them successful so far. I've been told that we have just about 10 minutes for Q&A. So let's be quick about that. Yes. The lady first, though.
Thank you. This was an excellent panel. My name is Donna Sims-Wilson, and I am the new president of Smith Graham & Company. We are a $6 billion African-American-owned investment management firm headquartered here in the United States. My question has to do with the diaspora. All of your institutions have been very successful in your representative countries, but I'm wondering what strategies and processes are you working on to be able to provide capital flows and bank the diaspora, Africans living in the US and Europe, et cetera, and working with them, with your institutions, and also how might you work with American-owned institutions to do that? Thank you.
Thank you. Let's take the second question, then we'll answer both. Yeah.
Thank you.
Yes,
My name is Graham Sinclair, principal of Cinco. My question goes to valuation and the opportunity in financial services in Africa. I'm a big fan of evidence-based research. Some of the best research I've seen is the Rescura Bright Africa report, which does focus on private equity investment in Africa, but also references the opportunity in the listed space. One of the key data points coming out of that report this year is that 60% of exposure in listed exchanges is to financial services. So it's quite clear why Mr. Diamond, for example, has a growth business for the next decade at least. But my question goes to a question of valuation. We know when it comes to banking, we've got issues of corporate governance, we've got issues of compliance, but potentially fraud, as in any market, right? Not specific to Africa. So I'm wondering how well each of the panelists sleep at night and how precise and comfortable they are with the valuations of their core business today, and perhaps where they have activities in growing the different units of their business, or indeed acquiring other businesses in other regions. Thank you.
Thank you. I think I want us to address the two questions, and I don't know, any of us should pick it up. One is on diaspora, how we are attracting capital flows and business interaction, and the next one is valuation of financial institutions. Anybody can take a go. Yeah, Simon, go ahead.
Let me just clarify the question. Are you, can you clarify that valuation in terms of what? Are you saying that the risks that you perceive in terms of fraud risk, operational risk, and the impact on valuation, are we taking that into account? Is that it?
Yeah, and especially when you come to financial services, because the opportunity for the numbers to have a fudge factor or for something to go badly pear-shaped in a particular situation are going to be much greater than, for example, where you have hardware or capital goods that you can kind of inspect and kick the tires of.
Okay.
Go ahead.
Let me take it from the regulatory standards in Africa, and maybe let me speak specifically for Ghana, changing very rapidly and improving. There are standards when it comes to issues that deal with fraud, AML risk, KYC risk. All those things are very, very high on the agenda as we speak today. And banks are having to comply with those standards, world-class standards. Some banks, and for GCB, for example, and maybe the other banks, we're all driving towards international standards. There's the implementation of the Basel principles and all that. So that generally is promoting some convergence in terms of the regulatory environment, and is helping in terms of making sure that we are adequately capitalized and to mitigate those risks. I think that over time, and the fact that we are very much interconnected with the global economy, and all these stories that are coming out about maybe compliance risks and conduct risk and all those issues are relevant to Africa, and we're paying attention to all those in terms of how we analyze our business and how we provide for those, and of course the impact evaluation as well. I don't know whether I have done justice to that question.
Let me, if I can add to that, I think, the evidence, to your point, would suggest that you wouldn't have an AMCON in the financial crisis if there weren't some issues. On the other hand, was that a market move or was it historic? All fair. But I think our experience in doing due diligence on Bank ABC and Development Bank of Rwanda, we're a little bit fearful going into that. We probably spent more money on due diligence, particularly in areas like Zimbabwe, particularly being an American, than normally would have been done in a developed economy. We took, I think it was around 20 million in additional provisions before we closed, which frankly for a bank that size is fairly expected, I would think. I'd be surprised if there wasn't something on an acquisition like that. I think the types of issues that we faced tended to be around where you would guess, single name, large credit exposures. And I would also keep in mind the business model. So there are many banking institutions, the smaller, more domestic ones, where because of the particularly high interest rates in many of the countries, the business model has been prone to be deposit taking and local T-bills. So there's been, as we all know, too little consumer lending and too little business lending. So I don't know if you guys would add to it, but I think we came out of it pleased in terms of things like, we didn't find corruption, we didn't find issues that we had to go back to our board on and say these deals aren't doable. We certainly found what you would expect in terms of, some credit issues, some, tax deferred things, small things, but it didn't add up to more than we would have expected. We're pretty pleased in the end of it.
Good. Frank, can you take on the issue of diaspora?
Yeah, okay, thank you, Albert. I remember I sent 2 people to the US. There's a group in Ghana which has actually been granted diplomatic status called AUDAF, American something, Diaspora Association of something. And basically what we had done was we had sponsored a 36 apartment block and targeted it at the Ghanaian diaspora in the US. That is the reverse. What you're talking about is how to harness the resources of not just Africans, but African Americans out here in the US who control a lot of funds to invest these funds in Africa. I think it's a brilliant idea, and some countries, including Ghana, I think have attempted it. The thing is for us to find the mechanism to make it possible to do that. I would imagine that right now it's still possible, but because of FATCA, yeah, are you familiar with FATCA? Okay, because you live in the US. Right now, every American living outside of the US, if you bank with, your bank has become an agent, whether they like it or not, of the US IRS. So we're supposed to tax you if you're liable to tax and send it to them. Or the first thing is to report the fact that, yes, you exist in the economy and you bank with me and this is your income that you put in. So that if you under-declare in the US, they'll deal with you. Otherwise, then I become an agent, and whether you like it or not, I will tax you for the US government, something like that. So that makes, that provides a certain, because already the Americans we deal with in Ghana are quite upset with FATCA. But yes, the diaspora bond is something that can be explored, and I think it's a very good way of mobilizing resources for investment in Africa.
Thank you very much, Frank.
May I just, Mr. Chairman, just address this?
Oh, you want to add something?
I have seen this with various, I've had the fortunate instance of working for banks from various countries, Pakistan, Middle East, and others. And this question always comes up, how do we get the investments from the diaspora to invest in our own countries? I think the only country that I know of that has successfully done that is India, through the non-resident Indian NRI deposit that they have talked about. But I can tell you it's a very difficult venture, because as soon as you step into doing something on a retail basis or investment basis with people from any country, you get exposed to a whole lot of compliance risk in USA. So yeah, FATCA is just one, but there's a whole lot of other rules that come into play. And you really have to be a big retail bank over here to do that. But there's nothing stopping us from looking at models like the Indian government and Indian banks have done, and partner up with some American banks and to be able to do that.
But
FATCA is Foreign Accounts Tax Compliance Act.
That's the actual name. If you, at one of the conferences they said FATCA stands for Foreign Assistance to Compensate America. I don't know.
Thank you very much. Thank you very much.
Remember, Big Brother's listening.
I think that on that note, unfortunately, we have to bring this very interesting panel discussion to a close. Thanks to Bob, Simon, Frank, and to Rafiq. Thanks also
And you.
to the audience. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.